Hi, I'm Micky Fulp, the mercenary geologist. Today I'm here with Amir Adnani of Uranium Energy Corp. We're going to talk a little bit about the uranium market, and then we're going to segue into Uranium Energy Corp, one of my favorites, if not the absolute favorite in uranium space. Amir?
Hey, good to be with you, Micky.
Yeah.
At the PDAC.
That PDAC.
And it almost looks like we almost survived the PDAC.
Well, we do survive it. It's hard work, but it's important, and we love to come here.
That's right.
And it's been a very boisterous conference. A lot of upside and a lot of positive attitudes toward the mining business. So we've seen uranium prices increase 42% from their December lows, and that a lot of that had to do with, coincidentally, with the Trump election. So what are the catalysts that move uranium price from $18 now up to $26 again?
While the Trump election is an important topic, and we could come back to it, we put that aside for a second, and there's a couple of developments on the supply side and the demand side it's worth observing. You know, on the supply side, that low point for the uranium price that you just touched on in November, where it got to about $18 per pound,
yes.
That price is it's too low. It's basically below
it's unsustainable.
It's below any uranium mine's all-in cost of production.
Right.
So naturally, what it's finally started to do is lead this low uranium price, which is near a 12-year low. It's leading to supply cutbacks, production cutbacks. So we saw some production cutbacks in 2016, but the real kind of mother of them all being the producer Kazatomprom, the world's biggest uranium producer. When they announced production cuts in January, early January, of about 10% of their production, which equals about 4% of global supply. Right. That was enough to really tighten the supply side. On the demand side of the equation, back in 2010, there was a contracting cycle, and the utilities were coming into the market, signing long-term contracts. A lot of those long-term contracts are rolling off now.
True.
And as they're rolling off, now there's with the expectation that we enter into a new contracting cycle and utility demand coming back into the market, that's enough to set the stage nicely for the demand side of the equation as well. So for now, we see a price that's really recovering, and we're coming off of that low that you talked about, but still, being in the mid-20s, uranium price has a long way to go. Incentive price to bring new conventional mines on is north of $70 per pound. So it's exciting to see it come off the bottom, but I think this is going to be a journey still ahead of us.
I agree with that, and one of the things we've talked about before is part of the problem we have right now is utilities have not come back into that buying cycle. So we have a lack of short-term demand, and that is where the spot market is.
We were really surprised last year by how little utility purchasing took place.
Right.
And in fact, to some extent, a lot of that purchasing that was expected to happen last year was transferred into this year. The nice thing about having a utility as a purchaser of uranium is that you know if they defer buying, they eventually have to buy, because
True.
You can't put copper in a nuclear reactor. They need that uranium. It makes up a very small percentage of their operating cost. And so while last year lack of activity by utility buyers caused the uranium price to really underperform, you know, went from $37 a pound down to $18. And that was surprising to the uranium miners. That purchasing by the utilities has to happen. So now let's quantify it. Number of the estimates that have come out now show that the purchasing requirements for uranium in the next decade is approaching 1 billion pounds of uranium. One of the largest uncovered reactor requirements we have seen in a long time. And there's a difference between demand for uranium and purchasing requirement for uranium, because demand for uranium is just all-in demand that utilities or reactors need in the world. And some of that might be covered already, or some inventories might cover that. But purchasing requirements are black and white. That uranium has to be purchased. And 1 billion pounds over the next 10 years sets a very solid demand profile, one we have not seen in the last 5 or 6 years. And that's one key fundamental reason to be optimistic right now.
One of the things I like, let's segue into Uranium Energy Corp, the company you're the CEO of.
Yeah.
One of the things I like about Uranium Energy Corp is it's highly leveraged to the uranium price. Can you explain a little bit by what I mean by that?
You know, as an entrepreneur, coming into the uranium business 12 years ago and And looking at what we all look for in the mining business when we invest and we think long term is we like to have leverage to the commodity price, and especially when we believe that that commodity price is undervalued. I was always a bit surprised to see that traditional miners, uranium miners, were fixed into these long-term contracts with prices that had a ceiling. And we always felt that if we focused on low-cost projects, in-situ recovery or solution mining projects, that the lower capital requirements would mean we don't have to take on big debt, which is what mining companies, conventional mining requires. Right. And as a result, we can stay on the low end of the cost curve and stay 100% unhedged. And it's tough to find that type of 100% unhedged book in the uranium business. So the combination of having entered the business at a point where we were still relatively a young company and we can kind of charter our own course, focus on low-cost in-situ recovery projects that have lower capital intensity, and making a decision to stay 100% unhedged. So that really gives our investors the full and complete exposure to the uranium price. So if you're bullish on the uranium price and want to express a bullish view, I think our company is really the best way to do that. And really, when you look at the in-situ recovery focus, and something you and I have talked a lot about, this is such an innovative way, such a unique way of mining uranium. As a method, it's been around a long time, but it doesn't play a big role in other commodities. You know, a little bit in copper, very little, but in uranium today, it's 40% of global production.
Right.
So that's what we're focused on in Texas and down in Paraguay.
Well, you had some interesting news this year, and this call you have on a higher uranium price, I think, was reflected by your shareholders. You announced a $10 million private placement in early January, if memory serves, and you closed it a couple of weeks later at 260% of that $26 million. So how'd you do that, Amir? I mean, that probably tells you some of the demand that people see coming in the uranium business.
When you look at UEC's shareholder base, and you see names like Rick Rule of Sprott and BlackRock, J.P. Morgan,
Micky Fulp,
and Li Ka-shing. This type of shareholder registry would be the envy of any mining company. Mm-hmm. And I think for us, it's an enormous vote of confidence in our people, our strategy, and our assets, that these investors have backed the company for many years. And so when we have seen a private placement announced, like the one we did in January or previous ones, we see support and interest and participation from a very strong base of existing investors who are some of the best names in the mining business, but also new investors who are, this year more than ever, quite intrigued by the changes in the political winds, especially in the US, with an incoming administration that truly has a different perspective on energy, national security as it pertains to energy.
Regulation.
And regulation. So you add all those things up, and it really is turning over and getting into a new chapter here. I think the next 4 years will be positively different than the last 8 years. And the raise that we did, I think, again, reflects the time that we're in and the potential inflection point that the market senses, but at the same time, sensing that uranium energy is the perfect vehicle to be able to capture this opportunity. The opportunity being that the United States cannot continue just importing 95% of its uranium requirements. This is a national security issue, in addition to the fact that it's a business opportunity.
Right.
And so you look at how UEC is oriented, from the team that we have led by our chairman, former US Energy Secretary Spencer Abraham, to the technical team individuals that you've met before, who've spent their entire professional careers in US uranium mining.
And mainly in South Texas, too.
In the southwestern US states and South Texas. Yeah. And coupled with this focus on the low-cost in-situ recovery method, it's the blend of these factors that really sets the UEC story apart.
I'm going to ask you one more question about UEC now, and that's your share price. Last year, 52-week running high low, 69 cents to $1.92, I think. Right before, right after you announced this financing, you went to $1.95. So when the price of uranium started moving up, Stock was $1.25. It went to $1.92, and now it's back down to $1.90 or $1.25. So is that a buying opportunity right now?
Well, I think certainly for what it's worth, I think besides someone like yourself who's focused on the sector and knows the ins and outs of the sector, there are a number of other mining-focused analysts that cover our company with research. Judging by their opinions, views, and target prices, it looks like the company actually is still undervalued relative to what market expectations are for where things are heading for the uranium sector. I think, again, judging by the very strong demand and interest that we had in this offering that we completed in January, you don't invest in the uranium business today because, in my mind, you're looking for a 20 or 30% return. You're looking in the uranium business today because you know that when the uranium market, which is a very tightly traded commodity, starts to move, it can move very quickly.
Yeah, it can move real fast.
I've talked to many people at this conference that say to me, this setup today for the uranium market reminds them of 2005, when the uranium price felt like it was consolidating nicely and was consolidating nicely at $20 per pound. And all it took was some incremental demand, a little bit of supply side disruption, and
few speculators come into the market.
And that always happens.
Yeah, absolutely.
And that will happen this time around.
That's why we love American stock markets.
Year and a half later, we saw the uranium price go from $20 a pound to $140 per pound, and we went from having 20 uranium companies at the PDAC to 600 uranium companies at the PDAC in 2006 or 7. And and it's fascinating because if you're a uranium company today, after 6 years of a very difficult market post Fukushima, first of all, I think we got to sort of tip our hats to those companies that have actually made a business. If you're in the uranium business today, you've done something right.
You have some staying power, and you're doing
there's
something right.
Unique about your business strategy, but this setup today really reminds me of 2005, and I think the investors who are looking at the sector today believe that we have 2 to 3 very exciting years ahead of the sector right now. You and I don't know the exact time and hour where.
No,
but as
maybe a little bit, not a short-term outlook. Yeah. That's not what you want to take here, unless you're a stock flipper. And
I need to ask you this question. What do you think of the value in UEC right now?
Well,
I think as we speak, it's 10 or 15 cents below the offering price. I think we're trading at about $1.30, $1.40, and the offering was done at $1.50.
I understand. I think it closed at $1.25, $1.26 yesterday. So, it's obvious that I remain a very committed shareholder of UEC, and because I have this longer-term view of uranium, and but some people, there's a lot of liquidity in your stock. What's your 3-month trading average with 130 million shares outstanding? Is that?
About 130 million shares outstanding.
And you're trading average volume, 2.5 million shares a day.
2.5 million shares a day.
My gosh, so you've got some traders in there too. And we all know that
widely held.
Yeah, that liquidity always helps in market capitalization. So I look at your liquidity as very positive for the company.
I think it's positive. And look, we always we have a U.S. listing only, so we're not listed in Canada. So we have a very concentrated capital market strategy, and our strategy to have demonstrated and built a widely held shareholder base that sees us as the perfect proxy to the uranium price.
Right.
Sometimes when you end up with a very widely held base, especially the U.S. market, as you know, is much bigger than the Canadian market. But what that means is really sometimes there are days, Micky, where we determine that the reason why we might be up or down is because what the oil price is doing or what the gold price might be doing. So some days you actually end up becoming correlated to other commodities that you and I know at the end of the day have no direct correlation or should not have with uranium. But I think, again, when you become very widely held and people view that you're a perfect proxy for uranium, you end up getting sometimes commingled or distracted with other dynamics in the market, and that's fine. I mean, I think at the end of the day, we have our core shareholder base, we have our management and our executive team, and if you look at our insider reports, you see
which I have done
regular insider buying and accumulation. I don't think there's any other uranium company where insiders are as regularly accumulating and are aligned with the shareholders as we are. some of the core names that I mentioned, the Sprots, the JP Morgans, the Micky Fulps of the world, having been there for many years.
That's true.
And so, I think there's a core nucleus of the shareholder base that is truly long-term, and we've demonstrated that through over a decade of having been running this company and the rest of my team. And that's really the ideal position to be in, and to continue to advance our South Texas assets. We're starting a new drilling program in a couple of weeks at our Burke Hollow project.
Hollow. Arguably your flagship project.
It's really emerging, and really it's a new discovery. We discovered it in 2012, a year after Fukushima happened. Pre-Fukushima, when our company had almost a 700 million market cap, we had a third of the assets that we have today, and we're a third of the market cap. And so it's a very exciting portfolio. A project like Burke Hollow could become one of the most important ISR projects in the United States. And so we're excited about that. And the Texas is now really going to be an interesting situation for us, because in Texas we have a great uranium business. And we now have also the former governor of Texas as the new energy secretary, the longest serving governor of Texas.
I don't think the DOE is going to be dumping 5 to 7 million pounds of surplus uranium on the spot market anymore. And as you're aware, that's killed the market, an uprising market. So,
that's right.
Anyway, thanks for your time, Amir. It's my pleasure to speak with you once again.
I appreciate you.
And folks, I urge you to go to the website, Uranium Energy Corp, and check out what Amir's done with this company, determine if it's got some upside for your portfolio. Thanks for listening. Thanks for viewing. Ciao for now.